Hey guys, Mike here. So today we get to answer all your questions. You get to participate on answering some of these questions, and it's very good questions this week. I mean, we're going to talk about Tesla, oil, XLE, where you can find seasonality charts. What else was it? Oh, putting call walls and all kinds of good stuff. So, and also talk about this rally. And I got an email from somebody, talking about elaborating on the breadth and these gap ups and what's a gap and go and all this kind of stuff. So, we're going to get into all that. So let's just get right into it and get it started. And please feel free to participate. And obviously, I'm going to start off as I usually do and say thank you for the extra love on those super chats or whatever they call these things. I really appreciate it. One from Matthew Woods right there, as you can see. Another one right here. So I really appreciate that, guys, as always. And first question is, hey, Mike, where do you find the seasonality charts? Okay. Where I have them, I actually pay for a service, and it's called Equity Clocks. I don't have any kind of affiliation with this company. I have no link for you. So just type in Equity Clock. You can type in the Seasonal Advantage Portfolio. And you can go in here and just search pretty much anything, almost any stock, index. And so this is what I've been showing you guys. So if I type in QQQ and pull it up right here, you can just see that kind of shows you what the seasonality is. You can play around with it. You can go through sectors, individual stocks. And it's not always accurate because obviously if you're going through crashes or whatever, but as it kind of shows you guys, it's been pretty good. All right. So that's one place you get it. I forgot what I pay for this. It's not a boatload of money or anything, but I just got it because I wanted to using the Discord and stuff. Now, next question comes from one of our members. Again, I won't release the name or anything, but it says, can you please do in your upcoming Q&A video some explanation about put and call walls, trying to understand how they work, and if I can better predict movement in large caps, AMD, Apple, Microsoft, Tesla, etc. And I think the most popular put wall probably ever had to be the Tesla $100 put wall. I talked about it in some late December videos, early January, and this is basically where I saw it at right here. It was on the Max Payne chart. Here's what I said about it. And if you look right here, reason why it stopped where it did, because it probably could have just kept going. There's the put wall I told you about at 100. And just so most people understand what a put wall is, you can read this. But basically what it is, it's a area that could be major support. There's a whole lot of put gamma in that area. And then you can also see from the data I got off this website, a put wall offers strong support, but it is not quite as strong and equivalent as the call walls are in resistance. So keep that in mind. And then the put wall is often a point where buyers will enter the market. And that's what happened with Tesla, right? It didn't even, you had the $100 put wall. I think Tesla stopped in like 101, maybe. It didn't get to the $100 put wall, but everybody just came flooding in, right? They flipped, and there you go, it took off. And so, the best way, if you can locate them, I pretty much don't use them that much unless it just, if it's very common knowledge. Oh, look at this big, gigantic call wall here, but that's going to be resistant. So that's the best way when you look at them to try to use it, right? It's like big dark pool areas as well, too. It's like, looking at those, they can be support resistance. They can be a magnet, right, to pull it down to that before you get your bounce, or pull it up to that before you get your rejection. So if you can find it on there, and I'm sure there's sites that, do that kind of stuff. I just found that one and seen others just going off the Max Payne chart. And that's the stuff I give the members every morning, but in a picture of it. And you can see, like the one I put this morning, man, people must have been either super bears or selling a whole lot of puts, because there was a lot more puts than calls for sure today going on and stuff. So, that's the way I would use it or have used it in the past. Hope that helps some. If you got other questions, just hit me up the DM, of course. Now, an email from you guys. Again, I won't release your emails or record your emails because you're sending those directly to me, and I'll keep your name out of it. And it says right here, Mike, can you explain what's going on with this rally? I keep hearing you talk about breadth, and then heard somebody talk about gap and goes and stuff like that, and explain to me what those are. Yeah, I mean, getting into this, looking in the chart, first, let's just look at it and we'll show what we're talking about. You got the NASDAQ composite here, right? Obviously, huge explosion. You see all these gaps, right? And none of them have filled. Okay, they just went. What happens is, and I'm going to pull up the NASDAQ 100 in a second and show you this, but you just get this major thrust in the market, right? Volume, where you have shorts. Okay, when people short stocks, what they're doing, they're selling them, right? When they have to cover the shorts, they have to buy the stock back. So that is one thing that's causing this thrust in the market. It's a huge, as you saw it, I mean, it's a rip your face off rally. That's the common lingo to use. And you can see right here on the NASDAQ 100, this brings in the volume bars. See these volume bars? See the level they're at right here? And then look at this enormous spike up on these bars. And that's what's creating these, and this is in pre-market. So of course, when the market opens up from the previous day's close, it's much higher and it leaves these gaps. And gap and goes, there's different ways people look at this, but when you have a ton of thrust. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Where at the same time, shorts are covering their positions, which means now they have to buy back the stock. And we're talking about billions of shares right across the world. So they're buying billions of shares back. All of a sudden, this stock's moving up. Calls are being bought like crazy, right? So, of course, what does the market makers do? They're the ones selling the calls to us. They have to hedge their position, right? Because they're short on the call. So now they're most likely buying the stock. This is how Tesla has these crazy moves. That's what Tesla does. I've showed you that in the past. And so the same thing with the indexes, the other stocks, and everything else. And so, and then, of course, what happens next? Then you got regular hedge funds that are behind. They're coming flooding in. You got FOMO from retail investors around the world. They're coming flooding in, right? And then you got the traders. They're just trading up and down all day long. And so you get these gaps. And so you can see on, like, if you go back on a Tesla chart, that you'll see, and this is very important to understand this about gaps. On a Tesla chart, there's gaps. The only way they will ever fill in their gap ups, all right, is if the stock drops 90%. All right, it'll never fill. Because understand, gap downs are when, obviously, usually you'll see this a lot on earnings. Netflix is most famous for this, or Meta, and they'll drop way down, right? And so those gaps, earning gaps will sometimes fill, but any gap down will fill more than a gap up. Do you know why? And it's very simple. It's because which way does the market go the majority of the time? Down or up? Up. Okay, I've read statistics anywhere from 68% at the lowest, upwards around 74% is going up. You can look at any chart and see that. You can just see it, right? So just keep that in mind when you're looking at gaps, okay? So gap downs will fill a lot more than gap ups, and the gap ups don't have to do it. And what happens is the gap and go happens when you just have this huge thrust, all the stuff happening, and you see, what would it go up, like 14% or something? And if that keeps going on, those don't have to fill. They don't have to. Now, next question says, what is this site? And this is a video I did the other day, and this site right here is what he's referring to is the economic calendar I get on TradingView. So you just type in TradingView economic calendar, and there it is. So it has all your stuff for the week. You can look at what's coming up for the next few weeks. So hope that helps out right there. Now, another email, and I'm also gotten a discussion with a member about this. It says, basically, the gist of this email is, Mike, I hear you talking about recession. So do one of our members talked about this. How do you think there's actually going to be a recession when people, as you keep saying, still have jobs? I don't understand how that's going to happen. But then when you look at all the other data, it looks horrible. And so can you please give me your thoughts on why you think there'll be a recession or why you think there won't be one? And here's the truth. Nobody knows if there's going to be a recession or how mild, moderate, or anything it's going to be. Nobody knows that, right? Because what I keep saying, I've said it for almost 2 years now. It's a time of first. We've never had these kind of shortages ever at the same time. We never had a shortage on labor. Never had a shortage on energy, right? Never had a shortage on housing this much. It's never happened. And that's the thing that saved us this whole time is the shortages, believe it or not. That's what it is. And so as long as people can work 3 to 4 jobs, it's just going to keep staying it off. We've never seen that in the history that I can remember where people can find 3 or 4 jobs if they wanted to, where I showed you the wages. What was it in Thursday's video? That people are making more money. A lot of them than they ever have. Fast food workers are making more money than they ever have. People at Walmart, you name it. Right? I've showed you, if you saw yesterday's video, the money market funds. It's crazy. Billions every month, being made off that. And so, and then all the people that are paying must have a lot of money because they're paying for, these homes with cash, people sitting in mortgages of, 2%, 3%, 4%. We just never had all that at once. So that could definitely help stay off a recession, not have a recession. Absolutely. But for me, I don't even look at it like that. And the truth is, I'm not hoping there's a recession because I don't want people to lose their jobs so I can buy stocks cheaper. There'll be a chance to buy stocks cheaper at some point in time, but I don't want to see people lose jobs. You know what I'm saying? Especially at the lower end, they're already hurting enough with inflation and how much groceries are and things like that. But as I told one of my members, I was, look, I got a list of things I'm looking at, right? And that's what I'm paying attention to. All right, so next one right here. Hi, Mike. What do you think about the drop in oil prices off a recent high? Seems a bit similar to previous recessions. This is going to blow your mind. That's actually not true. And I haven't even ever looked at this until you asked me that question. But look at this. These recessions right here, I think 3 of the last 4, whatever it was, they actually oil spiked going into the recessions. The .com was the only one, right? Because the recession was dragged out. But look at this. It was 2008, oil spiked. 1981, oil spiked, right? The only reason that it dove in 2020 is we shut down the world. Now, it's funny, though, if you put the S&P in here, look what you see. Stocks dump, but oil spikes, right? Stocks dump before the oil spikes. That was just kind of weird. So if you know in the comments like why oil spikes going into a recession, let me know. I don't really understand that, and I'm not an oil expert of any kind. And so please in the comments, let us know if you have an answer for that and what's happening with that, please. Again, you see 2020, that's when we shut down the world, so the stocks and the oil went down at the same time. Now, next one says we need XLE to move on up. I'm not sure why. Can it do so and have gas prices low or lower? Please, if this is your question, can you tell me why XLE has to move up? I'm just curious. But understand, you need to understand what XLE is all about, right? The only way it can move up is what? If ExxonMobil, Chevron move up, because that's, what is that, 40% right there of this whole thing? And then you add in a few more stocks and half of them are oil companies, right? And so what has to happen in order for, XLE to move up? Well, oil has to go up. And here's what I'm talking about. If you pull up oil, U.S. oil, and then Exxon and Chevron, well, guess what? They move together. Oil goes up, Chevron and Exxon stock go up. Right? That's the way it works. And I tried to stroll back and see if I could find any place where that didn't happen. But that's just the way it is. And so for XLE to move up, oil's going to have to move up because that's what moves those stocks up. When oil comes down, those stocks move down. Again, please let me know in the comments why XLE needs to move up. I'm just curious. But you can see, I mean, they're intertwined with each other, right? And so, and you're talking about gas. Now, gas, the question is, can gas go down while XLE goes up, or oil is what you're talking about? The answer is absolutely not. Because if you look right here, USGASP is the ticker for US gas, is what that stands for, and oil. Look at this. They go hand in hand. You know this because when Biden released the oil reserves, when we were going like $6 a gallon or whatever it was on average, the gas fell off a cliff, right? It went down to like 4, then 3. And so, they go hand in hand with each other. I tried to scroll back and find a time they didn't, but they just do. So, no, you can't have gas prices coming down. Again, the comments correct me if I'm wrong, but I'm just going off what the chart tells me, okay? But no, you cannot, okay? Now, talking about Tesla, I talked about the commercial they did the other day, right? The ad, the first ad they put out. And so I wanted to see what you guys thought. And I think I found like 1 or 2 positive ones, but there was literally the majority basically talked about like this, right? So on Tesla, marketing safety is an important part of the advertising campaign. Not the only thing. That commercial didn't depress me, but it didn't impress me either. It was just kind of boring. Yeah, I agree with that one. Ad on Tesla is boring. Yep. I'm open to EV also and like Tesla, but yeah, that ad sucks. Now, I am not anti-EV. I know a lot of people are. A lot of our friends and family go, hell no. You're never going to get me into an EV, and that's cool. I don't, and the real reason is because I think honestly it is education and understanding stuff. But when I'm talking about the marketing aspect of things, and again, I'm not some Tesla hater or anything. I own the freaking stock, so I don't want to go down. And then Elon Musk drives me nuts with the stuff he does to drive the stock down with his stuff he just likes to say on Twitter and things like that. But when it comes to marketing, again, I'm not some marketing genius. You see my channel, ain't no fireworks going off around that. But I've taken, I have an MBA, I have another business degree. I've had to take plenty of marketing classes and do projects and work for companies and see how it works. And here's what I am. I'm about benchmarking. And so if you're new going into this, for me, especially if you got as much money as Tesla has, what I'm doing is I'm looking at saying, wait a minute, what is the most popular vehicles right now? And who has done their ad campaigns? I want to know. And so what I would do, for example, I'm going to show you the kind of commercials I will put out, because the one thing I know about marketing, you got to capture people's attention. You just got to, right? That's the way it is. If you don't capture their attention and get them to watch it, don't matter what kind of information you got in it. And there's ways to do it where you can make it kind of fun, right? The one thing Tesla definitely needs, and you'll see it, watch these two. and then compared to what they seem like they're going to do. And I'll tell you the trap they're falling into right now.
So, are you excited?
I am, but I'm a little nervous. This feels like a big change.
But it's not. I have one. People act like they're so hard to take care of or whatever, but it's totally a piece of cake.
Well, that's good to hear.
See how easy that is?
I hope being a mom is that easy.
It's not. Bye now.
America's most affordable EV, the 2023 Chevy Bolt EUV, with standard home outlet installation included. Finds new ease, find new roads. Chevrolet.
We're seeing EVs more every day. Good to know there's one that can still make people say, you don't see that every day. Because it's the only EV that's an F-150. The all-electric F-150 Lightning.
And so I'm not endorsing either one of those vehicles, but those commercials actually captivate you. And here's the thing. I would absolutely do whatever I need to do to find the person that came up with the Ford F-150 marketing campaigns. I went back and watched the originals. That truck has been #1 in sales for like 43 years. You know how hard that is to accomplish? I mean, it's competitive for any product. Absolutely, I would go find that person because they obviously did something right. And plus, you see, like they got these great slogans. You know, it captures a lot of people's attention. The first one, what's it doing? It's going after moms, right? And so, again, if they're not trying to capture a new market and they're just trying to, some of you guys say, no, they're just going after the same people. Okay. I mean, do your thing if that's what you want to do, right? And I'm saying if you're going to do it, you got to do it right. You can't put on that ad they ran it's garbage. It's boring. And people are going to be lost in it. I'm telling you, you just spattering information at them. And what really worries me, because I am a shareholder, is the fact that I've worked for these kind of people before. I don't know if you've had the pleasure of working with people who they're so arrogant about their product. And I remember working with this company one time. They're like, yeah. And sales were just dipping, right? And people were cutting into our market share. And I kept trying, me and many other people were trying to tell them, like, here's the problem. Like, you can't, yes, I think our product is better, but the problem is the way you're going about this, trying to sell it stuff, it isn't working. And so finally they changed. And when they changed, oh yeah, they started eating the competition's lunch. And I know people say, oh, we got the biggest market share. I get that. But competition is competition, okay? And somebody said they compared this to iPhones. It ain't nothing like iPhones because iPhones don't call. You have to take a loan out to get an iPhone, and iPhones were convenient. I don't want the landline. People wanted these things. You just had to learn how to use the phone. I got my phone in my pocket, but I'm holding the phone here. That's a whole lot different than trying to go from a gas guzzler, which things spark plugs, oil changes, all that stuff, to go into an EV, right? There's a lot of education to it. It is different, right? And you're like, okay, I don't know much about it. And understand, as human beings, look, we're all, especially as we get older, what do? We get set in our ways. We like what we know. We like what we do. That's it. And that's the major shift over, right? And you got to eventually, at some point in time, you're not just going to be able to depend on the young people to buy your stuff, right? You're going to want, I don't know, anywhere from 35 to 55-year-olds getting in there. I'm just saying, right? So, and I'm rooting for them. I hope they have success. That's the thing. I'm not trying to put it down. I'm trying to say you got to get out of that arrogance of, oh, we got the best and all this stuff, and run, like, hire real marketing people to help you do this. Anyway, hope you guys got some out of this, guys. Please hit that like and subscribe button on your way out. Hope you have a great night, and I will see you tomorrow to set up the week for us. Okay? Have a good one.